Hey, what's up? Can you guys hear me? Hey, JPR King, how's it going, man? No sound. Hmm. Let me see if I can fix this real quick. It shows that it's working. Okay, we should be good. Hey, what's good, Admar? Nice to see you. How's everyone's weekend? Sweet, sweet. All right, looks like we get some good number of people here now. We got about 10 of you guys. Alrighty. We'll give it like a minute or so, and we'll just hop right into it. But yeah, sorry, apologies for not really being too active towards the end of last week. It was kind of a combination of not really seeing too much value towards the end of the week, and also just I was really busy and I was celebrating my girlfriend's birthday with her, so we just took some time off. But I did see, Friday was quite a bloody day, but other than that, didn't really miss too much. Um, I saw Amazon, man, they really came down hard after earnings, but that is going to be on the watch list. I did some charting over the weekend, and I found quite a few decent setups going into this week. So yeah, we can just kind of get started now. Um, so welcome, guys. Nice to see everyone again. Hope you guys had a good weekend. And I know I did. I didn't really do too much, but what we're going to be looking at today is going to be 5 of my top setups. There obviously is more than 5 setups that are tradable this week, but these are the 5 that I see have the most potential and are kind of those higher quality setups that I see. In terms of swings right now, because you guys know I'm primarily a swing trader, I still don't really like swings right now. I don't think it's a great time for them. Maybe later in the week, or even next week. I'm not sure yet, but I really focus on quality over the quantity. So I'm not going to force out a swing trade if nothing really looks good. Just not my style. So nothing too crazy there. I will go over our one like kind of fairly long-term swing we have at the October expiration. Haven't done anything with it. It's NTNX calls. Haven't touched it at all. Still just holding that. We have a ton of time, so I will go over that chart as well in this session. But for this session, we're going to be going over AMD, Amazon, Netflix, Nvidia, and Shopify. These are the 5 that I like for this week, and I do have bearish setups. All of these charts look fairly similar, and I'm going to be kind of playing off of that. They all bounced off of really important supports last week. They had that relief bounce, and towards the end of the week, so like Friday, as the market broke lower, these also saw quite a bit of weakness on Friday. So what I'm looking for early in this week, early to mid this week, is a break of that previous bounce. Essentially, we're seeing a lot of these bear flag setups going into this week, and this is, we just want to play the trend essentially. So we don't want to fight the trend. Right now, it is very weak. So, we do have a bearish bias with this bear flag. This is AMD. So in terms of style of kind of how I'm doing these charts right now, I'm just doing these very simple red lines and then white lines. Sometimes you see green. I haven't updated this. I can honestly get rid of that. We're not looking at calls up here. But right now, obviously we're looking at downside, so that's going to be these red bold lines. That's going to be your entry. You can see I placed this right at our swing low essentially that we hit last week at $84. $84 is going to be my trigger level for AMD. So, depending on how you personally trade, you can take this off a 5 minute, 15 minute, hour, daily, whatever you want to do for the candlestick. But just make sure you have that confirmation. Look for volume. $84 is my level. Below that, we do have room to 82 and change. And then we also come down to this $80 to $79 level down here. So, a fairly good trade here. We do have a 2% move to the first target and then a 5.5% move to the second target. Always in options, that's going to be greater. So very nice chart here. And this as well as NVIDIA are the two semiconductor stocks that I have on here. So I do think it's important that we take a look at SMH to look at the general trend. So here, this is SMH. We did have this on the watch list. It was either last week or 2 weeks ago. I forget. But we basically, price was over here. And we were looking to break this initial support here at this 237 lane. We did end up breaking that, and we did, I did point out that we had this daily gap below that, is going to be our target essentially if we don't hold 237. And what happened here? We broke, closed confidently below 237, filled the gap, came lower, and bounced off of support trend. So right now, what we're seeing here is a very similar picture of a bounce off of, very critical support. And, for semis, this was actually quite a large bounce. This was let's see. Yeah, this was a good 7.5% bounce. We did come back down, and we did hold this low. However, a good confirmation for me in terms of the semiconductor stocks is if we can break below this low, so it doesn't have to be exact. I'm just doing roughly 229.40 4 here. Just roughly in this region. If we do break below this and we see continuation lower, that will give me confidence in those semiconductor stocks to also move lower. And our first target for these would be that low essentially. So you could take this as a trade if you want to trade like the overall, like maybe like an ETF here in this case. So think of this as like kind of like the SPY of semiconductors. So you could take this trade. For me, I just like doing individual stocks. So I'm going to do AMD. So, obviously this is weaker with us being already quite close to that low. So that would be giving some confirmation, and I would be pretty certain that we break below this $84 level, with that being the case. Since we were talking about semis, I'm just going to skip around to NVIDIA first, and then we'll revisit in alphabetical order. But here you can see very similar picture. NVIDIA had that big bounce, and we do have this really nasty candle from Friday. This is very, very bearish. So what we're looking for here is, I didn't use this 183 low. You can if you'd like. I'm doing a little more conservatively on NVIDIA, just because we do have this support line that's quite close. So for me, from like a risk reward standpoint, 183 to 180, like a $3 move here, it's not necessarily worth it for me because we may just get a powerful move back up, a relief bounce out of here off of 180. 180 is also a psychological level. So for me personally, on NVIDIA, I'm going to wait for 180 to break first. And if we do get that, I think it's going to be worth it for that wait of $3, just because our next target is a good $10 move to the downside. So we don't really have much support until this $70 to $71 region. with a major 78.6% Fibonacci retracement sitting at 166. So, this is going to be a very, very important area to the downside that I do expect to be a potentially good place to load up on some swing call positions. So, I can mark that fairly quickly. I don't have this marked right off the bat just because I like to keep my chart clean. But when we get to it, this is going to be a decent area to look for a call swing position to start building up. But until we see some, some movement down to my demand zone, I would stay away from swinging. Especially a giant stock like Nvidia. This is going to dictate market direction essentially. So just a reminder, we did bounce off of major support, bear flagging, looking for a break of this previous low, and for this case 180. Down to a 7-point move, or sorry, not 7-point, 10-point move down to 170. So yeah, pretty clear there. Next up, we're just going to go back to alphabetical order. Amazon, and by the way, I see there's about, let's see, 11 of you guys, 10 of you guys here. Please just comment or do type in the chat if you have any questions on anything I'm talking about, or need some further clarifications, whatever. I'd be happy to do that for you. So next up, Amazon. I alluded to this one earlier. Haven't updated the up here in a while, but we've been playing downside quite a bit on Amazon. I did alert one. I think it was way up here. Yeah, right here. I alerted this. Or no, I actually alerted this one. It was this. We took puts. I believe it was the 21st. Right here, off of this break of 29.90 roughly, and we did sell, I believe on that same candle, for a good 40-point move. We can see now this was an incredible short play. Would have, could have, but it is what it is. 18% to the downside. Obviously, earnings helped the push down, but this is a definitely 1,000% play if anyone held that. But now, with this weakness, it's not like Amazon, because I looked briefly into their earnings. It's not like they're they're gonna blow up and they're gonna go bankrupt. It's not like that, but there's nothing really too exciting right now going on with these companies. A lot of them already announced their splits that are coming up. So there's not really any catalysts per se that investors are looking forward to possibly prop up the stocks. So there's just a lot of heavy weight on these stocks right now, especially with the slowing down, especially this quarter that we've seen in a lot of stocks. So that's just what hit Amazon as well, and it drops quite violently. What I'm looking for here, on Friday we did have that dip, and we did actually dip below 2450. This is going to be a big psychological level, in my opinion. For Amazon, you want to look for 50-point, 100-point increments, and 2450 is that next level of importance. So 2450 for me, even though we did crack it on Friday, we did close above, showing some. There's buyers here at 2450. So early to mid this week, I'm looking for a break with volume below 2450. And we are looking for a 50-point move roughly to 2400, and below that, we can see a lower move. It'd be around to here. So fairly decent opportunities here. For the first target, we have a 2% move, and then a 5% move. Definitely something I want to catch. To see how that compares to this. It's about one of these candles. Well, 1 to 2 of these candles. So definitely a trade that's worth taking, in my opinion. It's good risk reward. So, again, under 2450, we're looking for 2400, and then about 2330. I'm looking for questions now. From Rohit, say if you take an entry for AMD on break of 84, how would you set stop loss? Earnings on Tuesday. Interesting. Yep. So good point. Earnings is on Tuesday, so I probably will not play this. If I do play it, it's going to be a break of that low on Monday. I'm not going to touch it Tuesday. I don't know when it is. Aftermarket. Okay, so it's aftermarket close on Tuesday. So in terms of this trade specifically, I would do this as a day trade, and you can like trim and just hold like one contract into earnings as a a lottery play. Personally, I would not full swing that just because earnings can really just it can really be either way. So just be okay with that. But in terms of stop loss, I have talked about this a few times. So I can go over it again, but afterwards, if you do yourself questions on my channel, I did recently do a video. I think it should be titled something like lesson one. I do talk about position management, and one of the things I do go pretty in depth with is how to set these stop losses and manage that position. So definitely something you can look into. But what I would do here is, use this. This is the tool that I really like to use on TradingView. It's this tool right here. You just go into this tab and you do long position, short position. So this is obviously the short position. We're short biased. This middle tab is our entry. So, you'd put it right at around 84. And then next up, when I have these targets labeled, I will put. Let's just look at the first. So let's say we're playing to the first target here. So now we're going to adjust this, and you can see as I adjust this, this risk/reward ratio value changes. This is, again, personal preference. What I like to do is look for at least 1.5 to 1 risk reward. So what that means is I'm risking $1 to make $1.50. That's just that minimum roughly that I will ballpark look for. That's a trade that's worth it for me. So let's just look at that real quick. So go to around 1.5. Just roughly. And then just very quickly, I'll just put this here, just so you can see it kind of visually. So this is kind of how I would set up my trade. I would use just levels, essentially. So I'd use around 85.3, and that would be my risk reward trade for 1.5. At the first target, you can take off half your position, set your stop loss to break even. So you put it here. Well, you would go there, and then you can write out the rest. And you'll see the risk reward pretty much gets skewed to infinity. But that's also because you have no risk anymore on this trade. You're taking off half of your contracts at target one, essentially, and then you're moving that stop loss that was originally up here down to your entry. So, and you can even move this above your entry if you'd like. This is just an example, but that just creates a risk-free position, and you either stop out half your trade for no loss essentially on the net trade, or you ride it out and you get to hit that final target for a healthy profit. I hope that makes sense. Yeah, no problems, Rohit. Glad that makes sense. And yeah, anyone else that has questions, please do feel free to leave that in there, and I don't have any no problem answering that. So next up, we do have Netflix. Netflix has been incredibly weak, and you guys can kind of tell I really like to use TradingView for these longer term charts. And I did post on TradingView actually quite a while ago. It was last year, 2021, in Q4, right around this area. I posted that this is essentially going to be a major top, and I had a pullback down to this mid 400 region. So I was half right, I guess. This was a really major top, and I actually sold a lot of my equity up here, luckily. But however, this is actually a much more major drop than I thought it was. So I did adjust this count a little bit, and this Fibonacci retracement is going to be the all-time retracement essentially. So to kind of visualize that, I'll zoom out a little, and you can kind of see this bottom correlates to the all-time low. and this correlates to the all-time high. So this is, the Netflix all-time Fibonacci chart. So this is a very, very significant levels here. You can see we did gap below the very important 61.8% retrace off of earnings. And since then, we have not recovered to this level since. So what this tells me is, we are targeting eventually down to this 154 region, which is, very scary if you think about it for some monster stock like Netflix. However, definitely something to be careful of is we're in extreme oversold territory. You can see here, the last time we had this is this major drop off of previous the previous earnings it had, and what happened? It's very similar in fashion. You can see it, continued downside, gap down, kept going down, 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 and off of this we hit a major reversal, and boom, like a very, very strong move up, 31%. This is obviously, this happens in bear markets. Netflix very clearly is in that bear market phase. I don't think there's really any arguing that. What you see is, pretty grindy moves down and very, very violent bounces to kind of, stop out those shorts and then kind of screw the longs after. So it's, that back and forth game. So you can see here, this is a very grindy move to the downside right now. And you can see here on this indicator, we are showing, pretty extreme oversold territory. So I would definitely be careful shorting this. Not saying that there isn't more downside room, because I do have, downside levels here. However, I would just be careful. So for something like this, take profits sooner than you think. And don't be greedy, essentially, because when we do get the bounce, because we will get a bounce somewhere down here, it's going to be violent, I think. So, even from this level, a 30% move, kind of, mirroring what happened last time, would bring us from 178 all the way to 231. So, it's going to definitely rip some faces here. And that's something that, we could potentially catch as well. But right now for downside, sidetracked. I do have 185 being that important level. Same story with every other stock that I've talked about. We did bounce off of 185, very important level. And below that, I do have 178. And then below that, just so I can zoom out and show you where I'm really getting these levels. These aren't random. This 178 region roughly coincides with this major pivot that we have here. And you can kind of see it's a region, because we do have some support here as well, right at like 176, 177. So that region here, there's a good chance we see some bounce. However, if we don't, we really are going to see quite a big move. It opens up another 10 points essentially to the downside. So, first target off of 185, we're looking at 178 to 176 roughly. If that region can't hold, we're looking for another 10 points to the downside, to 170 to 167 roughly. But yeah, that's Netflix. We already went over NVIDIA. Lastly, we're going to go over Shopify. Shopify, just like, a lot of other stocks, has gotten pretty destroyed. This is, pretty crazy to think about, to be honest, that, just last year, this was, $1,600, $1,700 stock. And I remember trading up here too. So it's kind of crazy that the stock is, trading at such a big discount down at $400. So, if you are a fan of Shopify for the long term, this is obviously not financial advice, but maybe start looking into building or adding to your long-term equity positions. It's definitely a discount, I would say. But speaking of that, let's go into the all-time Fibonacci. So we can see here, I just drew this really quickly. This is the all-time Shopify chart, just like previously I showed you on Netflix. So we do have this all-time low, all-time high. This is the Fibonacci that we get out of it. So, this is extremely important Fibonacci. What we see here is we have broken below the important golden pocket region of 168, or sorry, 61.8 and 65%. We're pretty confidently below that and have broken below this previous low as well. So, what we're looking for targeting is this 390 region. Below 411, and 410 to 411. That's really where this previous low is at 411.17. So just rounding down to the whole number 411, 410. Below this, we're looking for this region down here. And the thing that I really like about this trade as well is, how strong and violent Shopify is when it moves to the downside. It moves something like an Amazon or a Tesla. So you'll get really good premium out of this. And the other thing that I really like is these support levels down here that coincide with the targets for Shopify to the downside. They align very well with that almost, I wouldn't say max downside, but in terms of if this respects the 78.6% all-time fib, it's going to bounce in this 390 region. So down here, this is an area that I really like for swing longs when we get here. So this is almost two plays in one here. We're going to short off of 411 down to 396 to, this 390. We might get, a capitulation candle, or we see something like this. We go like this, break this low, retest it maybe. Down here, we see this. We get a big spike and then just all the way back up, and then something like this. I'm just going to leave that here just in case that actually happens. We'll revisit this later in the week to see how well this goes. But I would not be surprised to see something like this. You can kind of see this inverse head and shoulder build out before a big bounce happens. So I'm going to keep that in there. It's kind of like a fun little thing for me to see how right I am. But definitely look for that break below 410, 411. If you want to be safer, look for that retest. That may happen. From what I see here, it doesn't look like we're going to get that just because of how violent the moves down are. Because you can kind of see here just to compare the play. So this would be that support. There's no retest here. No clear. This is just a clean move down. So this is kind of what I expect here as well. We're going to get a pretty clean and quick move down to 390s. And this would be a good place to load up calls for a swing. So two separate plays there. Definitely something that I would be watching. But yeah, that is essentially what I have for this week. If you guys have any questions or have any charts you want me to look at really quickly, just leave that in the chat right now, and we can take a look at that. Give it like a minute or so if we see some tickers pop up from you guys. Tesla. Let's do it. So Tesla, I was considering putting this on the watch list actually. I did take it off though. Reason being, I don't necessarily like the place it's at right now. It's not at a place where I believe risk reward is in our favor. The next trade that I would probably want to take, I can kind of update this and show you. It's going to be something like this. So right now, we do potentially have this one leg lower to make a slightly lower low. It's possible. The one thing that I don't necessarily like about this is just, to get confirmation on this move down, we technically need a break below 812.50 roughly, and that's just really far off from where we are. If you want to be a little more aggressive, this is something you could potentially take. I'll just kind of go like this. Below 860, we can, so that's really this low here, essentially. We didn't technically get a close below, so this was a quick wick down, and then a bounce higher. So, this was a very strong level. So if we do get a close, or like we see very high volume, bearish volume under 860, you could potentially take a trade here. So I'm going to kind of like show this trade, I'm going to move this position kind of calculator over here, so we can see, risk reward wise, how we want to take this. So let's say we take an entry off of 860 roughly, and we're looking to have a target of, let's say, retest that low, right? So with that being said, we want to look for, roughly a 1.5 to 2. For me, Tesla is obviously volatile, so premiums are going to move quite a lot. So what this means is we don't need necessarily such a huge move to realize enough profits, essentially. So what I'd like to see here is actually a higher risk reward trade. So I'm not going to actually use a 1.5. I'm going to go at least a 2. So let's just use this now, and that gives me around 878. That's still quite high for me. Just because taking levels at 860, that's an 18-point move to the upside, and obviously options contracts are going to get burned pretty hard. So what I actually am going to do is, we're taking 860. I would use around 865, a 5-point move. This is something that I would be willing to take potentially. So this gives you can see now about a 7.3 a risk reward trade, much higher odds, and there's a decent chance it hits, just because we haven't closed below. We haven't closed below 860. If you want to be like super technical, you can use 862, 863, but I just want to use a whole number here. So 860 is going to be that clean number for me. You can kind of see previously as well. Similar trade that I actually took this. I didn't alert this, unfortunately. It just moved way too quick. But this is something that was on my plan for a while. You can see it's very similar here with this red line. We've bounced essentially, multiple times in this level here. And below 9673 was a huge breakdown, essentially. So you can see like 1, 2, 3, 4, 5 touches, and then 6 touch we broke down from. So this breakdown really shouldn't be too surprising to you guys, or most people, just because looking back, this was a really important trend line. We didn't reclaim it. You see very bearish volume here. So kind of similar scenario here. We just don't have as many data points, you can kind of see, which is why I don't like this as much. I left it off the watch list, but kind of like a bonus play, I guess. If you want, 860 is something to watch. But yeah, definitely keep your stop losses tight for this one, just because we know how violent things can get. Because if you can look at this candle here, when we hit support, if we use that 860 again, same level, you can see we dipped all the way down to 822, like over 4% move. But afterwards we ripped faces, and very quickly gained over 12% on the stock. So definitely be careful with this one. Kind of similar to like Shopify, where there's not as much downside anymore. So you just want to be careful, because to the upside it'll be violent. Any other stocks you guys want to see? I'll wait for the chat just to see. But MU, this is a swing that we took a while ago. We did take profits before this bounce happened, and we are looking for, a potential move lower. This is kind of similar to that Tesla play, to be honest. You can see we did bounce. We're not too close to the downside here. But here in this case, you could potentially take puts off of just that, that low. It's not the best setup, I would say. It's not A plus. I would say this is more like a C plus or B setup, which is why I left it out. But I like AMD and NVIDIA better in terms of semis. But you can kind of see that confluence again. Citigroup. Let's zoom out here. I haven't looked at this stock in ages. Okay. So what we're looking at here. Big move higher off of COVID lows and kind of just fading now. So what we're looking at here is quite a big move down. So what I would look for here, what immediately I can see is we do have that gap fill here. So here I would just kind of play this more as a momentum play off of this low. So call it $48. Can't type. There we go. We're looking for that. Below 80, so not 84, $48. You would probably target this 46 and quarter roughly. And this would be that daily gap fill below. So first target here, second target around 44, and then final target if we get to it 42, 30 roughly. Disney. Pretty similar scenario, to be honest. Immediately, I don't see any. Actually, just kidding. There's a gap. It's quite a big gap, actually. Man, would this suck if this hits? Roughly. Or sorry, that's not a gap. Or it is. I can't. Yeah, it is. This the box made it seem like this was a candle wick. But yeah, so this is a gap. I really don't think that's going to hit, but you never know these days. With this here, this is the major Fibonacci from COVID lows to post-COVID highs. We've pretty clearly moved below this 71.8% fib. So, targeting, we are looking at this $100 to $105. I say 100 just because it's a whole number. It's that magnet you can see here as well. So definitely keep an eye on that, but 105 also as well. In this case, I can see that this major pivot was broken, and we are also closed below this pivot. So for me, this is, in my opinion, a lower reward trade. You're not going to get as much reward in this one, just because entry ideally was actually on Friday here for first swing to the downside. Off of this, you're looking for here. This would be your target. So 4% move. But that's if you already got in. So this could be less. I would look for this 108 level to see how that holds. But yeah, I mean, if you see continuation to the downside or maybe a retest early in the week of this of this pivot level, and we reject, that might be a better play to take. SPY. So for this one here, you can see this is pretty gross, to be honest. What we're looking at is potentially, I guess, big thing we want to look for here, obviously, is going to be this. This is the major place to look for. What I expect here, I don't expect a clean break. If we do retest this, I actually didn't even look at futures to see how they're doing right now. But essentially, if we test this level, maybe someone can type in the chat and check futures real quick for me. But depending on what futures look like as well, I don't expect this level to give up too easily. We may see some fake out where we push below and get a quick spring upwards. But I don't expect this to be a very clean break to the downside. Right now, upside is favored, not long-term or medium-term upside. It's more short-term upside. You can see it based off of this projection here, off these arrows from the yellow. But even though it is short-term, this is this could be a decent bounce. So I'm just gonna kind of look off of this. Put this. Any of these could hit really. Any of these levels to the upside. So let's just call it like that. Even from that minimum upside target, off a bounce off of this 410 region roughly, we're looking at around 3.8 to a max of 7.6% upside. So definitely something you wouldn't want to hold through. So this is one of those things where if we do bounce pretty strongly on the market, a lot of these short setups are also going to bounce. And it's going to be a matter of taking that new low or taking that low essentially that we had drawn out, and off of the bounce higher, we can look at this retracement value. It's going to be the same picture across all the stocks and potentially get an actual entry, like a much better entry actually, up here, anticipating that continuation downward. Futures flat. Okay. No worries. But yeah, that's kind of how I'd play things here. So another thing to look at here also would be VIX. We can see that we did, move a bit higher. We can see here that this region it's not even a region really, it's actually just a line. It's a pretty clean line. Here, we didn't close above, but you can see volatility is definitely picking up again. So, if we can get a close above $28, VIX would probably target this 29.5 to $30. So, usually the signals downside. It's not 100% correlating, but usually when you see that spike in volatility, we also see the market move lower. So that could be a trigger here. And you can see, yeah. Let's see, QQQ. So here, this is weaker than SPY. We did break below here, and we did close pretty confidently below as well. So futures are apparently flat. So we are still hovering around here. In my opinion, this is going to be the kind of indicator you want to use for a lot of these, because a lot of these are tech stocks essentially. So what we want to see here is a hold. Like we might bounce early in the week, or even overnight futures. I'm not sure yet, but we want to see consolidation here, and even a retest of this this previous resistance would be great, or well, I should say support, because we would turn it into resistance, and this would correlate with that SPY bounce. And since this is weaker, we wouldn't even get that high of a bounce. and this would just reject really hard. So yeah, that's kind of what I'd look for in Qs. I wouldn't look to immediately short it, just because of how weak this is already. In my opinion, like the risk reward for us for this trade to the downside would have been a swing from Friday. But yeah, I wouldn't touch this yet. I would wait for this to develop a little bit and see where we move from there. But yeah, and then I see Baba as well. And I'll do like one more if anyone has another one. But yeah, so Baba here, we did gap up, so it actually closed green. Pretty big green actually. I don't know if this was news or something, but I haven't really looked into it. I haven't tracked this stock in a while, but regardless, if we see a break below last week's, or I should say last Friday's low, we do have this gap. And, that is something that we could see. So recently we do see Baba like to retest these gaps. Sometimes they don't fill all the way. You can see like this one here. This one didn't fill all the way technically. But yeah, definitely something to look at. And then you can see this one as well. Didn't fill all the way immediately, but after a while it did fill. So below this low here, you could look to come in for like a 3 to 4 point move to the downside, and that would be a pretty solid trade. But yeah, not something I typically really trade too much. For me, Baba is something that I hold for the long term, in terms of like equity. So obviously it's not looking too great, but for me it's more of like a bet on their fundamentals and long term view. So we'll see. But yeah, that looks like most questions were answered here, and yeah, so that pretty much wraps it up. So just to briefly go through it again, we did go over AMD, Amazon, Netflix, Nvidia, Shopify as my core 5 stocks on the watch list. We did look at Tesla. There is a potential trade there, and we did look at a few other stocks. Futures are flat, so no real bias going into this week. But if we do see that downside continuation, all of these setups to the downside are primed and they are ready, so that we can take advantage of that. But otherwise, I wouldn't be looking to swing trade just yet. Just the reward isn't just there yet, so just be patient, and it'll pay off once the opportunity does arise. But other than that, that's all I have for you guys tonight. Thanks for tuning in. Please do make sure to like, comment, subscribe. Let me know, how I did, what stocks you guys are looking at, and what future topics, lessons you guys want to see from me. So definitely, leave a comment there if you have a suggestion, and I'll work on it. But other than that, have a good rest of your Sunday, and yeah, happy trading, and I will see you guys on the Discord. See you guys.